call it a big letdown for investors today. There were discouraging developments on two crucial issues for the markets. Syria, where President Obama didn't get the international support he was looking for, to the jobs report that showed American businesses weren't hiring much in August. Both disappointments caused wide swings in stocks, going from triple-digit losses on the Dow to closing numbers basically unchanged. We begin tonight with the Labor Department's August employment report. 169,000 jobs were added to the economy last month, but that was fewer than forecast, while the numbers for June and July were revised downward. The unemployment rate ticked to a notch lower to 7.3%, but mostly because so many Americans simply stopped looking for a job. Hampton Pearson takes a closer look behind the numbers and how they could influence what Fed policymakers do next.
Joe Porter just got hired as a management trainee in the auto service department for one of the largest car dealers in the Washington, D.C. area. He's been on the job for just 2 weeks, and his boss says he's a natural.
We hire people that have the passion to serve the public, and we want to create a relationship with the customer, and that's how we grow.
Porter says it's a far cry from his job searches of the last several months coming up empty and a series of odd jobs that range from cleaning swimming pools to repossessing cars.
Oh, it's awful, you know, trying to support a family and everything else, and nobody wants to give you a chance, you know, and if they do, they don't want to give you what you need to be able to survive.
People like Joe Porter getting new jobs because of a rebounding auto industry is one part of the August employment story, but there is a concern. Even though the unemployment rate is now at a nearly 5-year low, it's happening for the wrong reasons. The labor force participation rate in August was 63.2%, the lowest monthly rate since August 1978, 35 years ago. Other signs job growth momentum is slowing. The Labor Department says 74,000 fewer jobs were created in June and July than previously reported. Some leading economists say it might give the Fed second thoughts about tapering in September.
The decelerating momentum in the job market, and that is an issue, and it will muddy the waters regarding the taper.
Economists say weak data increases the chances for Ben Bernanke and his fellow monetary policymakers to delay tapering. But a possible compromise could be to reduce those bond purchases from $85 billion to as little as $10 billion per month. For Nightly Business Report, I'm Hampton Pearson.